Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is up slightly, as you can see on the S&P, 0.2% there. Pretty much throughout the day, it was led by the large tech stocks. Nasdaq is up about 1%. Everything else is pretty much negative today. S&P is up slightly. So in the last couple weeks, it seems like tech is continuing to push higher while everything else kind of lagging here. So let's dive into it here on the S&P and trying to figure out what we can expect going into tomorrow and potentially remainder of this week here. So it looks like there were some shenanigans this morning. Looks like, so this was first hour. So what happened was we saw a slight gap up. It looked like, and I wasn't watching this morning, so I actually can't tell. It looks like it gapped up. So it gapped up, but what I don't know is if it gapped up. It looks like it gapped up and then it's continued to rally for a little bit. You see that upper wick there. So right, that looks like that's what happened. We here, let me blow this up so we can analyze it closely. So it looks like it gapped up. So this is where it closed yesterday, right? It gapped up and then it looked like we did see that rally first hour and then it got sold off and then that continued to sold off. That's why this candle is red. So this is open and this is closed on the first hour, right? So it continued to come down, sold off, some fake out there in the first hour, and then it came down and filled the gap. And then what happened? Well, after the gap got filled, it acted as support. And we talked about this yesterday, right? Best case scenario for the sellers that I talked about yesterday, best scenario would have been gapping down. This is why by the price, even though there were some kind of shenanigans, right, in the first hour, ultimately we did close the day positive. Why? Because we gapped up, we continued higher, and we did see from here to here, there was a lot of sell-off going on there. And what was the fluctuation there from the peak for the day, from the lows? That's about 0.7% fluctuations in a first hour, and that's a big fluctuation in the first hour, given the fact that we didn't go anywhere for the last several hours. But because of this gap, it was open yesterday, and when the gap got filled right here, right, it acted as support, and it is no coincidence. It is no accident where the first hour we closed above my short-term moving average. I mean, we closed above my short-term moving average there. I closed on my short-term moving average there. Closed above my short-term moving average there. There are wicks though. So during the intra-hour, we're below it. We closed above my short-term moving average there. During the intra-hour, this was a Monday or Friday, right? It looked pretty bearish. And then we closed above my short-term moving average, and we gapped up here, some shenanigan here, and then we closed above my short-term moving average, similar to here, showing us that exposing that lower wick where there was dip buying activities that happened. And then second hour is no coincidence that we started here above my short-term moving average and kept rallying higher. So let's get rid of that. There's no more gap. That gap level acted as support. So we have this level, which is a prior resistance as a potential new support. Let's adjust it a little bit. Just let's do that. So here, and then here, right? And then let's see. I'm just gonna put this down here because that's the gap area. And in between, that's probably gonna be let's put that here for now until we breach it. So that's prior resistance, new support, prior resistance, potentially new support right now. In between that, we have my short-term moving average residing at 337.73. So there's nothing new. The market has been in this grinding higher for weeks now, right? And we got to the all-time high level today, and it took about 4 months. It's been known as the it is the fastest reversal ever recorded in the history of stock market. We've never seen a 35% correction on the S&P and the market gets back to the all-time high level in 4 months. That has never happened. So you and I were witnessing history here. We're going to look back on this day in history. Like in the future, maybe 10 years from now, even 5, 10, 20, 30 years from now, where the 2020 coronavirus dip might have been the biggest buying opportunity ever. Obviously, we wouldn't know that, in the short term of sense, looking at just last several months, yes, that had been the biggest buying opportunity this market has ever produced. But let's say if that becomes some kind of a generational low, where this market gets into an uptrend for, I don't know, several years, 5 years, 10 years, then it's going to be known, it's going to go down in history as the biggest once in a lifetime buying opportunity ever. But anyway, we'll obviously take it day by day, and we'll continue to track this market. But let's look at the oscillator real quick. So there's been a lot of talk, a lot of comments, a lot of replies on my social feeds regarding bearish divergence. I don't know why so many people are, so sensitive with bearish divergence. The thing about bearish divergence is when it doesn't play out right away, it kind of becomes, when it becomes a grindy line. Anyway, I talked about this. So if you've been watching my video, I talked about how when it's grindy like this, it loses potency. You know what I mean? It loses potency already. It needs to be like a peak to peak. There was that peak to peak clean bearish divergence, right? And then made this oscillator come all the way back down to the oversold vicinity. And we did see some correction there on the price, but this market has been incredibly adamant. And it's been like 2 months, or not 2 months, but 2-3 weeks, and the oscillator has not came down to the bottom of its band. And I think this is like first time in history, as long as I remember, as long as I look at the 65-minute chart. Again, it happens quite a bit on the weekly or daily, not a lot on a 65-minute chart. That just tells us that how adamant this market is, because we've been just floating on top, right? I can go back. Actually, if I go back all the way to late July, it's been almost 20 days. 20 days, like 3 weeks, where this oscillator has been elevated and staying above on the top of its band, where I found support here and here recently. And so now some people are asking, well, aren't we bearish divergence here? Well, it's only a bearish divergence if we see this thing crossing down. If we have a visibility and confirmation that this oscillator has fully crossed down while the price made a higher high. We don't have that. Do we have any cross down? No, it's still moving higher. So that means if this thing keeps going higher and this thing goes higher, it could surely get above, or at least get back to the overbought level again. And we talked about this last time over the weekend that, if we find support here and if it crosses up, basically what buyers are doing, buyers are continuing to creating space for themselves, the bulls, right? To continue to push higher, right? I used an analogy how Michael Jordan used that, create a, when it's crowded. Obviously we are in a crowded level because market is super extended. So it's extremely crowded up here. But the market continues to create space so it can keep grinding higher. How Michael Jordan in a crowded area, there are a lot of defense. He doesn't have enough time. He makes a little bit of space with his fadeaway and shoot that fading away jump shot. And it's been like that in a similar way that bulls are doing some acrobatic shenanigan here, right? Like creating space so it can keep grinding higher. And with that, the oscillator never comes back down to the oversold level, and it's not giving anything for the bears to make any kind of move, and market continues to march higher. And this and as we talked about this for weeks now, this is very aggravating for the bears, because obviously bears probably came to a conclusion that this market is near all-time high. Nasdaq is well above that. Nasdaq is up about almost 70% since the March lows, 30% year to date. I mean, it can't. There's no way it can continue move higher. They might have came to the conclusion maybe a month ago, and this market. This is why shorting this market when the market rallies like this, because bulls can grind and grind and grind and grind and float up higher. Right? And stay up, you know, and float around and be elevated. Obviously, when the bears come, they will come furiously. They can make this market go down 2-3% in one single day with just straight down flush to the downside. And that's what worries many, you know, investors and traders up here, right? This is the reason why I have not put on any new long positions the last several weeks. I've been actually unloading a lot of my longs to take profits, but still riding many of my longs so that if the market continues higher, I can continue to ride that. But at the same time, I am preparing to accumulate more on the next pullback. I put some hedges a little bit here and there, nothing crazy though. But, you know, according to my trading and investing strategy, I've been making decisions accordingly based on where the market is today. Nobody knows where the top is. I cannot call this is a top. Like, nobody can. If anybody's calling the top here, well, they've been calling the top last several months every single day. So we'll come back tomorrow. We'll see how that plays out. Bulls got a little bit of move here to continue to potentially utilize this space. Got a little bit more space because it made quite a bit of space, created quite a bit of space here to prop itself up. So we got a little bit more space here. If we do see this thing rolling over, then we potentially do have bearish divergence, but it's still grindy. It's not grindy on the oscillator. It's pretty clean on the oscillator, but the price is pretty grindy. When the price is pretty grindy like that, it kind of loses its potency. And then we got the short-term moving average there and stuff. So 338, 337. So we have to come back. Only way the bears can really bring this down, it can't be just these short-term intraday, you know, slight moves. It has to be some furious gap down with some furious bloody red candles. Not candle, just furious red candles. Continuation, follow-throughs. That's only way bears going to try to at least put some damage. Until we don't see that, this market can keep grinding higher. So come back for you guys tomorrow. We'll see how it plays out. We'll go from there. Enjoy your evening. Good luck trading tomorrow.